What's up, folks? Kenneth here, streamhomeloan.com. I hope you guys are doing well. Making a quick video. I wanted to elaborate on a short that I just did. And the short was called 3 Reasons Why Realtors Need to Work with Mortgage Brokers instead of mortgage lenders, right? The common misconception in our industry is that lenders are just better than brokers, right? And it kind of makes sense in the sense that, hey, look, if you're a broker and you have to go to a lender, then that must mean that you're a middleman and they are better, right? Not necessarily. Yes, when you're operating as a broker, we are a middleman. We're basically finding the client, connecting with the client, and then taking them to a lender that can facilitate their transaction. But if you think about that, for the lender, that removes a lot of cost, right? So instead of them having to house an employee, give that employee benefits, run advertising, brick and mortar location, outreach to clientele, all that, they have someone like myself, a professional, that cuts out all of that in between and goes and gets the client. So brokers do offer advantages and offer benefits for clients, and then on the flip side for realtors, right? So if you're a realtor, one of the main benefits of working with a broker and sending your clients to a broker is that that broker has a network of lenders that he can work with or she can work with to figure out what the best program is for your client, what the best pricing is available for that program, right? So for myself, our company is a correspondent lender as well as a wholesale mortgage broker. We can either lend the money as a correspondent lender or take our clients to one of our wholesale partners to figure out who has the best pricing. I kind of describe it as like a wholesale kind of compares to, let's say, a Costco or some sort of a wholesale grocer, where based on the fact that there's bulk pricing, you're getting the benefit of purchasing a lot of the same item. They're going to give you a little bit of a discount. For us, on a monthly basis, we're bringing millions of dollars to our investors, to our wholesale lenders. Therefore, we're able to pass down those small pricing discounts to our clients. So it's really, really hard to beat a wholesale mortgage broker, especially one that knows how to use the different lender relationships that they have. Number two, when you're working with a wholesale broker, though, along with those different relationships with lenders comes program flexibility, right? So different lenders have different guidelines, different niches, and different hot points, and just different things that are, I guess, built into their business model. While you might have some lenders that are focused on a paper, only your best credit scores, full documentation loans, and that's part of their business model. You have other lenders that are geared more towards more flexibility. They're offering programs that are outside of your conventional lending boxes. They're offering programs that are geared towards clients that don't have excellent credit score, and they're offering programs that allow clients to put less money down or even take advantage of down payment assistance programs. These are things that a lot of your institutional lenders don't have. Along with that program flexibility, we all know that realtors, when they're in escrow, they might experience fallout. It might be because the appraisal comes in low, and now your client either has to put more money down or look for an alternative program that can work with that scenario. Sometimes your client's credit scores change. Sometimes your client's income is calculated differently by the underwriter than what they initially expected, making it to where they might have an issue qualifying for the loan. When you're working with a wholesale mortgage broker like myself, we have the ability to say, okay, all right, we got hit with this. We see that the income is lower than what we started with. What can we do? What other lenders do we have in our network that can facilitate a loan for this particular scenario? While if you're working with like your traditional retail bank or lending institution, they have a certain box, and if you don't fit inside that box, they're going to tell you to have a good day and they won't be able to facilitate your transaction. While for myself, I've had to save loan scenarios halfway through escrow where the lender that we were originally with was denying the loan because something changed. Maybe the 4506T came back showing lower income, or credit score refreshed and the credit score was outside of the program guidelines. We were able to reach out to our investor partners, our lending partners, and figure out who was going to be able to facilitate that transaction and still get it closed. So I've always felt very confident as a loan officer because we have all the options available. And if you're willing to dig for it, you can find it. So yeah, program flexibility. If you're a realtor out there, you want to be working, or you want your client to be working with a loan officer that can switch programs, that can be dynamic and figure out what other alternatives or options are available. And number three is that when you're working with an independent mortgage loan officer like myself, compared to an agent that goes into a bank on a daily basis, or works inside of like a retail call center environment, the real difference that you're going to experience on a personal level is that for me, I am fully vested in all my transactions. And not to say that those other loan officers aren't vested and don't want to get your deal done. The difference is that after 5 p.m. or 6 p.m., whatever time they get off, usually that's it. Usually they are off and you can call their direct line and leave a message or try to get someone else within the company. But these companies traditionally will close their doors or start closing down 5, 6 p.m. And that's going to be the end of your ability to get answers to your questions for realtors and for the clients, right? As a loan officer, I've had many realtors hit me up after hours like, hey, what's going on? Are we going to be able to get this closed? Are we going to meet our close of escrow date? Realtors on both sides of the transaction, my buyer's realtor as well as the seller's loan officer, because it's stressful for them. So as a mortgage broker, we have the ability to really figure out other options outside of just what we have in-house, right? Wells Fargo, they can only offer you what Wells Fargo can offer you. Loan Depot can only offer you what Loan Depot can offer you. Me, I can offer you what Wells Fargo's doing, Loan Depot, and every other lender, and figure out which one's going to be specific, and which one's going to really service your client the best, and then which one's going to get the deal done, right? And lastly, you can call me after hours. So for my loan officers that are out there, these are the things that we really have to express to real estate agents and to our borrowers, so that they really understand what it's like when you're in escrow, when you're in a 30-day period trying to get the most important transaction closed. This is the most important transaction for most people, right? Buying a home, this is the largest transaction for most people. So when you're in a 30-day period, that gets stressful, right? Realtors get stressed, borrowers get stressed. The loan officer is going to be the one to be able to calm the parties down, let them know where things are at on the loan side of the transaction. And if you've ever been in the situation where your loan has hit the fan, income's not calculating, you got to scramble for a gift or for assets, it's tough and everyone's stressed out. So the ability to be dynamic, switch the program, look for alternatives that are going to work to get the deal done is vital. And if you don't have that, you'll see how much it hurts when you're in that situation. So that's my advice. I think that for a realtor, you are being a dynamic realtor when you set your client up with a mortgage broker, as opposed to sending them to a bank where options are limited, pricing flexibility is limited, and their boxes just are usually a lot tighter, and it's because they can do that. Wells Fargo can say, hey, you know what, we have a massive brand, we have massive clientele, we can only cater to 700 plus credit scores or 660 plus credit scores, while a wholesale mortgage broker has programs down to 500 credit, right? So that's just a little insight into why I think mortgage brokers are better, and why I think that for realtors, it makes you more savvy when you set your clients up with someone like a mortgage broker. So hey, once again, thanks for stopping in. Thanks for checking in. Please like and subscribe. Comment if you have any questions. Let me know if you agree, if you disagree. But at the end of the day, I hope that this brought some value to you and gives you something to think about, and hopefully helps you increase your production and get some deals done. 100 years of wealth to you and yours. Cheers.